Federal government releases more than 400 billion naira, part of component of 2018 capital budget. Central Bank revokes license of microfinance bank. Nigeria considers boosting intra-African trade. This and more on Business Express, reaching you on the network service of the Nigerian Television Authority, the NTA. I am Muplang Dakok. Nigeria is considering the possibility of increasing her shareholdings in the Africa Export-Import Bank, Afrexim, as the initiative to boost intra-African trade grows stronger. Minister of Finance Zainab Ahmed said this after a meeting with the board of the bank in Bali, Indonesia, saying Nigeria is working with the bank to put in place world-class health facilities across the country. Finance and economy correspondent Leah Katung Babatunde reports.
Part of the things we discuss is the possibility of increasing our shareholding, and also we discuss some of the programs and projects that Afrexim is supporting in Nigeria. Afrexim has a very large portfolio in Nigeria. About 40% of their portfolio of the bank is Nigeria, with support to the government but largely to the private sector.
The private sector support is with a view to reinforce the collective belief that African economic liberation could only be realized by and within the African continent. Trade agreement and marketing issues have been the push factors of slow growth in Africa. With abundant untapped resources and opportunities, Nigeria is leveraging on the facilities of the Africa Export-Import Bank to improve her social indices.
Other things we discuss includes setting up a medical park in the FCT, which is still a discussion that has been going on for quite a long time. There's also some quality assurance centers in Ogun and also in other parts of the country. We also discuss the issue of setting up some industrial parks in partnership with the Federal Ministry of Industry, Trade and Investment in 3 centers, Lekki, Kano, and also one in Kaduna.
We are supporting virtually all the banks in Nigeria in terms of the lines of credit to be able to do import and export and support SMEs. We also pursuing other what I would call impactful initiatives. We are finalizing arrangements to begin developing a center of excellence for healthcare, because we want to see how we can begin to promote medical tourism in Nigeria. We want to develop a center that will make it possible for Nigeria to have facilities to take care of complex diseases in oncology, in hematology, cardiovascular, and other complex diseases.
Nigeria is the 3rd largest shareholder of the bank. In Bali, Indonesia, I'm Leah Kating Babatunde.
Thank you, Leah. In another development, the Minister of Budget and National Planning, Udoma Udoma, says the federal government has so far released 460 billion naira capital component of the 2018 budget. The minister, who was speaking on the sidelines of the annual meetings of the World Bank and IMF in Bali, Indonesia, says he is optimistic that the resumption of the National Assembly will enable government to take decisive action on the implementation of the budget and especially its borrowing plan.
To the National Assembly, asking for approval for the borrowings to support the 2018 budget. But the National Assembly has been on recess for over the last 2 months, so they didn't deal with it before they left. And so, but they're back. So we're optimistic that once they approve the borrowing plan, we'll be able to move very quickly. Things are getting much, much better. We're in a stronger position today than in 2015. Our foreign reserves are $44 billion US, up from $26 billion US in 2016. We now have a trade surplus. Our exports are growing, whilst our imports are not increasing, and we managed to manage those imports.
Udoh Udoma also reacted to the IMF's position on Nigeria's strong foreign reserves.
We are happy and encouraged that the IMF has spoken so positively about Nigeria. With regard to the spread of wealth, you know, we are the first administration that has put aside $500 billion for social intervention, social investment program, to try and ensure that the most vulnerable, that we spend money on the most vulnerable. So this is what the government is doing, to try and bring up the poorest people, you know, so as to narrow the gap. So we're spending money on the school feeding program, we're spending money on NPower, we're spending money on trader money, giving to small traders. So we are conscious of the need of the government to address the issues of the vulnerable.
Two major reports were released by the IMF this Wednesday at the annual meetings of the fund and World Bank in Bali. Leah Katumba Batunde has a wrap-up of what was said on Nigeria's economy.
It is day 3 at the ongoing annual meetings of the World Bank and the IMF, and conversations around building a better, stronger global economy have begun earnestly here in Bali, Indonesia. Now I can also tell you that the Minister of Finance, Zainab Ahmed, and her counterpart from the Budget and Planning Ministry, Udoma Udoh Udoma, along with their delegations, have been meeting with the relevant bodies here on what Nigeria is expecting to take away from these annual meetings. Bringing you up to speed on happenings here: debt, tax, financial sustainability, financial inclusion are some of the high points of discussions right here in the meetings venue in Nusa Dua. IMF's Christine Lagarde was part of a high policy panel discussion where the issue of empowering women in the workplace was also prominently discussed. Now the thrust of that conversation is for a more balanced and equitable situation in the workplace propelled by globalization. The IMF this Wednesday released the Global Stability Report. Now that report suggests steady global growth rate despite a downgrade in emerging and developing economies.
Central banks should continue to normalize monetary policy gradually, and they should communicate their decisions clearly. Emerging market and low-income economies should build buffers against external risks, should pursue exchange rate flexibility, and should consider timely, targeted foreign exchange interventions. Regulators should address vulnerabilities by deploying micro and macroprudential policy tools, including supervisory capital buffers where appropriate. They should also develop new tools to address vulnerabilities outside the banking sector.
Nigeria's sustainable plan for debt and also for currency policies were also in focus.
In the case of Nigeria, there is one other important driver that always affects its external borrowing costs and economic conditions more broadly, and that's oil. So Nigeria, being an oil exporter, is obviously very sensitive to changes in oil prices. In terms of policy responses, of course, flexible exchange rate is the first line of defense. Allowing exchange rate to act as a shock absorber is helping the economy adjust to the new external environment. In terms of FX interventions, of course, FX interventions might make sense in certain circumstances, but then, you know, one has to consider how exchange rate is valued relative to fundamentals, what is the level of reserves, whether there may be other policy tools that might be more appropriate in country-specific circumstances, and so on and so forth. Another thing that I wanted to mention is that given that we are still sort of in the relatively early stage of monetary policy normalization in advanced economies. Now, one can expect global financial conditions and external financial conditions for emerging markets to remain challenging going forward.
Moving on now, managing public wealth is the focus of this edition of the Fiscal Monitor, with global debt rising to as much as $182 trillion. What are those critical concerns?
So let's move on to low-income developing countries. A key challenge for this group of countries is to improve people's livelihoods by meeting the Sustainable Development Goals by 2030. Most low-income developing countries face substantial spending needs to achieve Sustainable Development Goals.
Nigeria's present tax initiative and the revenue drive also featured prominently in Wednesday's conversation, plus suggestions on expanding the tax system.
Priority for the country, increasing non-oil revenues. If one looks at the ratio of interest payments to revenues for Nigeria, that's quite high. And certainly increasing revenues is the way in which one creates the space to do social spending, infrastructure, and other types of spending that benefit economic growth. So clearly that's a priority. How does one go about it? We have been discussing over the years with the government, and we see the priorities in tax administration, but there's also aspects of tax policy that could help. So certainly in the tax administration, to increase the compliance rate, something that could be done is to increase tax audits, to use e-filing to a greater extent. There's data matching exercises that can be conducted. So generally trying to reduce tax evasion, possibly corruption as well. Those would be priorities on the tax administration side. On the tax policy side, usually what has been recommended in previous discussions is to increase excise taxes on tobacco and alcohol. Stamp duties is something that can be looked at again. And more generally, I think it's not just the revenue side, it's also the spending side, clearly improving the choices that one makes on which infrastructure projects, how does one go about selecting the ones that are really going to boost growth.
Well, that's a wrap of some of the key issues that have been discussed in the course of the ongoing annual meetings this Wednesday right here in Bali. And Business Express will continue just in a moment from our Abuja studios.
Thank you, Leah. To discuss what the recent World Economic Outlook implies for Nigeria and Africa, we are being joined by Professor Oyinlola Olaniyi. You're welcome to Business Express.
Thank you. Thank you.
So the International Monetary Fund cut down its projections from 2.1% to 1.9%. What does this imply?
Well, it implies that the growth in the economy is going to be less robust than it's expected.
Okay.
Well, you see, when most of the times when we talk about growth in Nigerian economy, what we actually talk about most of the time is a reflection of the price of crude oil on the general economy, because the price of crude oil rises, revenue from crude oil rises, and it's additive. It increases the volume of the gross domestic product. So actually, it is the fluctuation in the prices of crude. We recall that with the price of crude oil rose because there's some growth in 2018 in developed economies, and in April, the World Bank revised, the projection for developed economies and some of these other countries that are buying our crude downwards. which implies that the price of crude oil may not perform as well as formerly expected. Though at that time, they still expected Nigeria's GDP to rise. So I think the implication is that we should realize that the growth we are experiencing now is not really, it's just hinged on the price of crude oil, and we should manage it like that so that we use the proceeds to on projects, particularly infrastructure development, that can fast-track the growth of the real sector, so that when we talk about growth, it will be really that the real sector is growing, and irrespective of what happens to crude oil, the economy will be doing well.
All right. Fingers point to the fact that Nigeria, South Africa, and Angola are not performing to maximum capacity, which is the reason for the projections for Africa. What's your take about that?
Yes, yes, because these are the large economies in Africa. So if Nigerian economy is not doing well, then a large chunk of the, for example, Nigerian economy is about 50% of West Africa, thereabout. So if 50% of the whole has not performed well, then of course the whole will not. So it really points to the fact that if Nigeria is able to improve its economic performance, it will be able to lift up the rest of Africa. And if Nigeria is not able to, because of the size of our economy, because of the size of our population, it means we'll keep Africa down.
Okay. So the report says Nigeria can do better on a solid footing. So what are those things that you think Nigeria needs to do?
Nigeria needs to fast-track its investment in infrastructure.
Okay.
Critical infrastructure like energy, transportation, road and rail transportation. We need, these are the things that are keeping, that are making the industrial sector not competitive, that are making businesses to fail, that are making the cost of production in Nigeria very high. And if we are able to get these things right, it means that we will be able to unleash the potentials of the initiative and innovativeness of the Nigerian people, and you'll be able to enhance productivity in the Nigerian economy.
Okay, thank you very much, Professor Oyinlola Olaniyi. That's all we can take for now. You're still on to Business Express, reaching you from the network service of the NTA. Remember to send us your feedback via email, businessexpress@nta.gov.ng. You can also reach us through our Twitter handle @NTA News Now. And don't forget to use the hashtag BizX showing on your screen. Now, a few weeks after the collapse of Skybank, the Central Bank of Nigeria has revoked the license of Garu Microfinance Bank in Bauchi. The manager of the bank, Ibrahim Abubakar, confirmed this on Tuesday, adding that the bank had been taken over by Nigeria Deposit Insurance Corporation, NDIC. Ibrahim Abubakar said the microfinance bank was closed because it was facing liquidity problems. Vice President Yemi Osinbajo says government is on the right track to tackling the unemployment problem in the country. The Vice President stated this at the 9th Presidential Quarterly Business Forum in Abuja. Jide Onifade reports that the Buhari administration is investing heavily on infrastructure and human capital.
Job creation has been a priority of the administration, says Vice President Yemi Osinbajo, as he addresses participants at the Presidential Quarterly Business Forum.
The surest way of creating jobs is by enabling the private sector to do business easily, to do what it does best, so that opportunities are created in agriculture, in the agro-allied industry, in services, in manufacturing, And in all the other areas that the private sector is dominant.
As he explains, the administration is working through the Presidential Enabling Business Environment Council to improve the business environment and working on several sector-based schemes.
If we spend $1 trillion trying to bail out the poor in this country, we'll make a massive difference. Not 5 trillion, 1 trillion. Every year, spend 1 trillion will make a massive difference. So those are the real issues. I think that when we talk about employment, we've got to look at scale. When we talk about job creation, we've got to look at scale. But we've got to address that bottom of the pyramid, because that's the largest number of our people.
Presentations by Minister of Labour and Employment, Chris Ngige, Minister of Industry, Trade and Investment, Okechukwu Enelama, and Afolabi Imokwede, as well as other top government officials, emphasize efforts of government. Observations were made by participants and solutions preferred.
There should be more attention to vocational education for sustainable development. All these areas that can really help the employment and production of this employment can be physically looked into.
So a lot of the issues that are raised here have to do with pointing out to government areas in which people need assistance, areas in which people appreciate what government has done, areas in which people make suggestions.
Thank you to all of the State House. It's Gideon Ifade.
And on the stock market, the NSE All Share Index for today, 10th October, closed negative by minus 0.11% to 32,382.58, with market capitalization at 11.8 trillion naira. Meanwhile, global stocks fall after IMF deems global economic outlook. Bosede Ebel brings us up to speed.
In the early hours of today, Wednesday, 10th October, most stocks in Africa were on the red. Ghana's GSE Composite Index depreciated 2.76 points to 2,929.28. Namibia overall 0.11% to 1,264.81. Kenya's Nairobi All Share dropped 0.19% to 149.63. Tunisia's Tunidex 0.03%, and South Africa's JSE Africa Top 40 also declined 1.70% to 47,153.62. Stocks in the United States closed Tuesday 9th October trading session mostly lower after a volatile session as investors continue to fret over the implication of higher bond yields on equities. Dow Jones Industrial Average depreciated 56.21 points to 26,430.57. S&P 500 dropped 0.14% to close 2,880.34, while Nasdaq Composite Index edged up 2.07 to 7,738.34. Asia stocks were also lower on Tuesday, following the lackluster cues overnight from Wall Street amid worries about the impact of rising interest rates, U.S.-China tensions, and a slowing Chinese economy. Nikkei dipped 1.34%, Shanghai Composite dropped 0.07%, and the Hang Seng Index also depreciated 0.09%. European stocks ended Tuesday higher as tensions lessened in the bond markets and tech stocks recovered. FTSE 100 gained 0.1% at 7,237.59. CAC 40 0.4% to close 5,318.55, and DAX also rose 0.3% to close 11,977.22.
This is where we drop the anchor on Business Express. Please join us on Friday for another edition. Remember to send us your feedback via email businessexpress@nta.gov.ng. You can also reach us through our Twitter, NTA News Now. And don't forget to use the hashtag BizX showing on your screen. All previous episodes are available on NTA's YouTube channel. I am Muplang Dakok.